Chris Robinson joins us now for the final trade of the day, and we definitely have our eyes on the skies for those farmers out there. There's been so much rain, and now the fields are just soggy.
Yeah, the slowest planting progress since 1995. Almost the slowest planting progress on record. So what does that mean, planting progress? Well, there's a window where farmers can get the crop planted.
Right.
And the longer we go without the crop in the ground, people start worrying about the yield dropping. The yield is how much production we're going to get. So in the last 3 weeks, corn, which had been in about a 35-cent trading range for about 3 years, really sideways, exploded. We rallied $1. So, and just really went vertical, one of those markets that you rarely see, especially recently, because it's been pretty quiet in the grains. We've been drifting lower. We've been in about a 7-year bear market. So long story short, corn is the driver. It's actually pulling up wheat and soybeans. Soybeans have rallied kind of in sympathy. First, we got to get the corn planted.
Yeah, you want it to be what, knee-high by 4th of July?
Knee-high by the 4th of July. It's not going to be there this year.
All right, so what would you do as a potential trade here?
Well, there's two ways to go. Either you think it's overdone and this dollar rally is something that you want to try and sell into. We'll rally $1. Maybe you're looking for a 20, 30-cent correction. One contract of corn is $50 a penny. So if we just rallied $5,000. If we were to lose half of that, we could have you could make $2,500 or lose $2,500 on one contract. So it gives you a lot of opportunity. And so you have two ways to go. You buy a call or buy a put. That limits your outlying risk immediately. You know from day one how much you can lose. When you're long an option, you know that's all you can lose. So that's what some people will do. They'll go into this, they'll put a straddle on, they'll buy the call, they'll buy the put. One of them is going to explode in value.
They have exposure to both sides of the market, the upside of the market and the downside of the market.
Right. So it's a way to catch a market that's moved. And now one of them is going to go worthless. Right?
Right.
The strategy is, and sometimes it works, sometimes it doesn't. You got to remember, you have to take all this stuff with a grain of salt.
So these are tricky trades here.
Oh yeah, they absolutely are, and that's why I would say this is not an environment to start learning on the fly. If you don't know what you're doing, you better educate yourself or have somebody that help you. But when a market's moving like this, it generates lots of opportunity. But opportunity, it's a double-edged sword, right? It's like, you can be a hero or you can hurt yourself. So that's why I always counsel people, especially if they're speculators and just learning. If you're long an option, that means you own it. From day one, that's the max you can lose. Where people get in trouble, and you can really get in a lot of trouble and hurt yourself, is if you sell options, and that's an open-ended risk.
Well, thanks, and those are very wise words. So thanks for your Trader Talk today.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.